Hello and welcome back to Bitcoin Dorks, your daily source for all things cryptocurrency. Today, we're going to talk about Bitcoin and where it's currently at in terms of its price and market movements. Specifically, we'll be discussing the Bollinger Bands indicator and what it could mean for the future of Bitcoin. First, let's start with some context. As of the time of this video, Bitcoin's price is sitting at around $55,000. This is down from its all-time high of nearly $65,000 earlier this month, but it's still a far cry from where Bitcoin was just a year ago. In April 2020, Bitcoin was trading at around $7,000, so even with the recent drop, it's still up over 600% in just 1 year. So, what's causing this recent drop in price? Well, there are a few factors at play. One is the fact that some investors are taking profits after the recent run-up in price. Another is the news that the US Treasury is planning to increase regulation of cryptocurrencies, which has some investors worried about the future of the market. But let's get back to the Bollinger Bands indicator, which was created by John Bollinger in the 1980s. This indicator is based on moving averages and standard deviations, and it's used to track the volatility of an asset. The idea is that the bands will expand and contract based on how volatile the asset is, with wider bands indicating more volatility and narrower bands indicating less volatility. So, where does Bitcoin currently stand in terms of its Bollinger Bands? According to John Bollinger himself, Bitcoin is at a key point right now. The upper band of Bitcoin's Bollinger Bands is currently at around $63,000, while the lower band is at around $32,000. This means that Bitcoin is currently trading in the middle of its Bollinger Bands, which could be seen as a sign of relative stability. However, it's worth noting that Bitcoin's Bollinger Bands have been narrowing over the past few weeks, which could indicate that a big move is coming. This could be a move to the upside, as some analysts are predicting that Bitcoin could hit $100,000 or even $200,000 by the end of the year. But it could also be a move to the downside, especially if there is more negative news or regulatory action that affects the market. So, what does this mean for investors and traders? Well, as always, it's important to do your own research and make your own decisions based on your own risk tolerance and investment goals. However, some analysts are recommending that investors take a cautious approach right now given the current uncertainty in the market. One strategy that some traders are using is to wait for a clear breakout from Bitcoin's Bollinger Bands before making any big moves. This means waiting for the price to either break through the upper or lower band before buying or selling. This can help investors avoid getting caught up in a false breakout or a sudden price swing that goes against their position. One major factor that's been driving the cryptocurrency market in recent months is the growing interest and adoption of cryptocurrencies by institutional investors. This includes not just companies like Tesla, but also major banks, asset managers, and other financial institutions. These players are attracted to cryptocurrencies for a number of reasons, including their potential for high returns, their low correlation to traditional assets, and their ability to serve as a hedge against inflation and other economic risks. Another important trend in the cryptocurrency market is the rise of decentralized finance, or DeFi. This refers to a new wave of blockchain-based financial applications and services that are designed to be open, transparent, and accessible to anyone with an internet connection. DeFi platforms allow users to lend, borrow, trade, and invest in a wide range of digital assets without the need for intermediaries like banks or brokers. This has the potential to disrupt traditional finance in a major way, and many investors see DeFi as a key driver of long-term growth in the cryptocurrency market. However, it's worth noting that the cryptocurrency market is still highly volatile and unpredictable, with big price swings and sudden market crashes a common occurrence. This is due in part to the fact that the market is still relatively young and immature, with many players and institutions still trying to figure out how to navigate this new asset class. The major risk facing the cryptocurrency market is the potential for regulatory crackdowns and restrictions. Governments around the world are grappling with how to regulate cryptocurrencies, and there is a lot of uncertainty and inconsistency in terms of how different countries are approaching this issue. Some countries, like the US, are taking a relatively hands-off approach for now, while others, like China, are cracking down hard on cryptocurrency trading and mining. Despite these risks and challenges, many investors and analysts remain bullish on the long-term prospects for Bitcoin and other cryptocurrencies. They see the potential for these digital assets to disrupt traditional finance and offer new opportunities for wealth creation and financial inclusion. Of course, there are also plenty of skeptics who believe that cryptocurrencies are a bubble or a scam, and that their prices will eventually collapse. In conclusion, Bitcoin is currently at a key point in terms of its price and market movements. The Bollinger Bands indicator suggests that the market is relatively stable for now, but there could be a big move coming in the near future. Investors and traders should remain cautious and do their own research before making any big moves in the market. However, the overall outlook for Bitcoin remains positive, with more institutional investors getting involved and the potential for significant